Still a lot of positions, but trimming quite a bit. Let's go through them. Okay, everything highlighted is a lot of positions. Everything highlighted is open for now. So, FYI, I do post my positions for the regular subscribers every Monday, Wednesday, Friday. I will post these after the call today. It looks like highlighted, so you know it's open. Okay, but for the members group, I post it every day in the chat. So I have a member Telegram chat group for my members. If you want to become a member, click join. Email me, sergio@sergioavedian.com. You get a whole bunch of things. You get my trades live. As soon as I do it, I post it up there. So again, none of it is financial or trading advice. You can tag along. You can not tag along. Do your own due diligence. Not my thing. I'll put them up there. You understand it, you understand it. If you don't understand options, if you don't understand Greeks, if you don't understand synthetics and strangles, and if you've just been selling cash secure puts, welcome to the show. You're going to learn a lot. And because there is a million ways to skin a cat. Cash secure puts are fine, wheeling is fine, but that's just really just, I don't know, elementary school stuff. But again, I'm not knocking it. It's valid at all. It's good. When the market's going up, you'll make money. It's when the market turns, what do you do with it? Long story short, so we put on, when I say we, chat and whatever not. Beautiful trade, actually. So we were waiting on Apple to break out. Apple broke out finally. Catch-up trade, actually, to the rest of the Mag 7. I did it with AAPU, which is the 2x ETF of Apple. I sold the August 20 puts, and I bought the August 25 calls with credits, or basically even. Closed all the puts now, and this was a 2-to-1, by the way, turbocharged synthetic, meaning so I was short 30 puts and I was long 60 calls. So as you guys can see, I'm down to 10. I'll keep that for entertainment purposes, but covered the puts with close to 50% profits, sold the calls with about 70% profit, so that's good. This is circle. I'm in a strangle. These are the prices. I will post all these again today. So I'm short one of the July 18th expiration 120 put on circle. Stock is 187. And I'm short two of the 140 puts. I sold the 120 puts at 320. They're down to 50 cents. I sold the 140 puts at 466. They're down to $1.15. In this case, it's good that it's less than what I sold it for, if you know what a naked or short strangle is. I sold July 18 expiration 320 calls at 750. They're down to $1.28. And I sold the July 18th 330 calls at $10. They're down to $1.80. And now we're going to allow theta decay to take care of it, although everyone is up 80-90%. I'll probably give it a few days. I don't think I'll let it go all the way to expiration. Crazy things happen. When you're up 80-90% on a strangle, you take it, although you should take it at 50%, and I did. I was short the 340 calls when the stock was 280 at a cost of $36, and they died. I bought them back at $6, so beautiful position. So we're just going to watch them melt a little bit more. I have another naked or short strangle on CoreWeave. Short the 125 puts, short the 220 calls. I'm short the 125 puts at 486. They're at $1.95. And I rolled down the calls, by the way, just like I rolled the calls on Circle, because the stock went down, obviously. I was in the 260 calls with a total of $8. I bought those back at nothing almost and rolled them to 220 calls. That's why the price is low, $1.60, and they're 77 cents. So that's working out beautifully. Next position is Fuel Cell. Stock is 550. I am short 25 of the July 7 puts at $1.35. They're $1.55. I'm willing to get assigned. I'm willing to take the stock at 565 range. It'll turn into a swing trade. But if it does rally, again, I'll post all these. And then please go check out every Monday, Wednesday, Friday, the posts. You guys can see what's happening in the account, okay? What positions I had when I closed. You can figure out if they were profitable or not, or losses. So that's fuel cell. Next one, Gorilla Technology. I was short puts, bunch of puts, 25s, 22.5s, and 20s. Stock popped after earnings, covered those, made good money. With that money that so when I'm doing a synthetic, there's two ways doing a synthetic. What's a synthetic, right? Instead of, it's very, well, equity efficient way to participate on the upside or downside in something, okay? Instead of buying the shares, right, laying out all that cash, you sell a put, buy the call simultaneously, and they don't have to be the same strike, and they don't even have to be the same expiration. So, but you create a synthetic position, synthetic long or synthetic short position. So sometimes when I do create synthetic longs or shorts, I do, the ratio is different, but then the strikes are different, expirations are different, but the ideology is the same. So basically what you're trying to do is sell the put, take the money in from the put side and spend some of that money, not some of it, not all of it, on either a call debit spread or calls. This is what happened in this case. I'm long August now. 20 options I'm long the 30s, short the 40s, a little bit of a loss, but I took in so much money on the put side on the rally that I'm not concerned. I will not let it hit the wall, obviously. This is Oscar Health, 1645. I started layering the position again. I got lucky on this one. I'm not going to deny it. I mean, you guys can go again, check the community page to see the positions. I had a synthetic on. I took it off, 75% of it the day before it tanked because of the news of the ACA. Now I'm layering the position back on again. What am I doing? Okay, I'm selling 17 puts and 20 puts August, and buying the 20 calls and selling the 28 calls as a call debit spread. Yesterday, actually, I was able to do the 17, 20, 28 at $1.60. I tried to add more to it at 2 today. I couldn't do it, but maybe on Monday we'll get down to that. This is another one, Rigetti Computing. RGTI is the symbol. Yeah, we put that on yesterday, and positions up like 60%, maybe somewhere in that range. So on this one, again, synthetic, but unequal synthetic. August, I sold the August 12 puts with a cost of $1.55. Well, as you guys can see, it says zero now because I covered them today at $1.05, $1.10, and $1. So cover the short put side, leave the calls alone now for a good ride up. Average cost on the calls are 92 cents. We're at $1.30 range, so going to keep the calls. That's another position. And here's another one. I'm short 200 shares of Sezzle. This is very taxing on my buying power, but I'm going to do it anyway. I like having balance, so I'm short 200 shares of Sezzle. 177 cost. Stock closed at 181. But this is a covered put. I'm also short 2 of the 170 puts at a cost of $10.07. They're down to $6, right? So what do? You short a stock, you sell a put, or you buy a stock and sell a call. In the case of buying a stock, selling a call, it's called a covered call. In the case of shorting a stock and selling a put, it's called a covered put. So these are July 18 expiration. Okay, stock is 180. I have a 4-point loss in the stock, but I have a 4-point gain on the options because I sold them, right? So if the stock is below 70, I'm going to get assigned 200 shares at 170, less the premium $10, 160. Well, I shorted it at 177. That's 17-point gain on 200 shares. That's like $3,500. But now, if stock doesn't go down to 170, stays above 170, okay, then all that premium is mine. Okay, then what? Now my cost basis has gone up on the short from 177 to 187, right? Same way. This is sort of just in reverse. SMCI, I can't get a hold of the stock. I'm just long 20 options, August 60s. I think it's going to break out. I think it's going to have a melt up, but I'm just not sure. Next position, short 1,000 shares of SoFi, 1848. Stock is 1853, so about break even. When I say short, by the way, I'm short the shares, physical shares. If you guys don't know what that means, please Google it. But when I do this is another covered put position. I sold the weeklies, which expired today. I sold 10 of the week, 10 of the puts at 25 cents. Okay, so stock is above 18. Okay, so that 25, see, is zero. I collected 250 bucks. Now, my short position from 1848 plus the 25 is almost 1875. And I do this just to I want the stocks to go down when I short it, by the way. Don't get me wrong, okay? I definitely do. Okay. And today I started buying puts, index puts, more hedge. I'm not that net long. Actually, if I keep buying more puts and short more stocks, I'm going to be net short probably by next week. So where are we? I started buying August expiration, August 15 expiration, 610 SPY puts. I bought just 10 with a cost of 637. They closed at 641. Okay, fine. It's just a little hedge. Another position. Man, I have a lot of positions. I'm short 600 shares of TSS Inc. I'm short at 30.13, but I sold again, covered put. I sold July 18th expiration, $30 puts at $3.40. So what does that do? 30.15 minus the 340. That's 3.5 shares. That's $2,000. If the stock is under 30, I get assigned, automatically close my short position. If I don't get assigned, the premium is mine. I will sell the options again. So basically it. But I do want the stock to go down, obviously, right? That's what I want. Last but not least, I added to this yesterday. I'm long 3,500 shares of WeRide at an average cost of 809. Stock is 810, basically break-even range. But this is a cover call, the opposite of a cover put. I sold 35 of the July expiration 10 calls at 38 cents. They're down to 25 cents, 20 cents. If the stock is above 10, great. It's a $10,000 trade. If the stock is below 10, I collect the premium, lower the cost basis. Whew, that's a lot of positions.